strategy at Wisdom Tree Asset Management. Jeff, it's great to see you. Thanks very much for coming on the show.
Thanks, Andy.
There seems to be a bit of a malaise in U.S. stocks right now. I know they're near record highs. Why do you think investors have been cautious over the past few days?
You could just be taking a little bit of a breather. We had been in pure melt-up mode here, and not even just in recent weeks and the reaction to the election, but generally speaking, I mean, basically all year long. I can only, just racking my brain, remember just a brief spell in March and April where stocks went down just a few percentage points. It just could be a simple breather.
Is it happy days ahead under a Republican Congress and President Trump in the White House? Happy days for equity investors, I mean?
Well, I mean, one thing is he keeps stacking his cabinet with people who would make up that House majority. So he needs to make sure he still maintains the House majority. You know, and I say we, I'm talking about the street here, are banking on, 15% corporate tax rate. That is something that we're baking in. So if you don't get that done, that would be something that would be harmful to the market. So that's one of those known quantities. And then you also have this consumer discretionary story. You know, maybe in Canada it doesn't get as much attention as here in the States, but we have the state and local tax deduction that went away. It was capped essentially in the 2017 tax cut. So like when me and Jessica, when we file our taxes every year, we did not get as much of a cut as we would have expected back in 17 because we're in a high tax state like Illinois. The theory would be that Trump is going to bring that back. And we need to make sure that does end up coming back, because otherwise that would be something that would be problematic for, consumer discretionary among people who are in these high tax states.
And we've heard, well, certainly lower income consumers said to be feeling the pain of inflation in the U.S.
Mm-hmm. And you know what? We can't really even make any heads or tails out of that inflation print yesterday. It looks like things are past tense on the inflation problem. We have a fortunate situation here where the gasoline price, which is really, Andy, you know how it goes. Gasoline is that probably number one thing that is so psychological for you in inflation, because you're filling up the tank every week. That is something that we've seen some respite. You don't know. I mean, you got this drill, baby, drill concept. Will that end up bringing down gasoline prices with some lag? You got this sideways chop here in crude oil. It doesn't really know whether it wants to be in a bull or a bear market. So we'll have to see how that plays out. But you'd have to think on the inflation side, maybe it's just the passing of time. Keep a two-handle on inflation. Let people get used to $7 butter. And then suddenly they wake up in 25 or 26 and say, okay, inflation is no real problem.
You have an interesting observation here about China. Investors have been impatient to see more stimulus from the regime. However, you note that bond yields have come down, and that's de facto stimulus for the economy.
It is de facto stimulus, and it's one of those bad is good situations as we've come to know in this market throughout basically all of our careers at this point, is that the bond market in that country is pricing in, should we use the D word? Depression? I mean, when you have a one handle on 5-year sovereign bonds in some country, it's certainly pricing in recession or a punk economy. But the reality is sometimes the bond market comes in and saves your hide. You had 4%, at least 4 on a 5-year sovereign in that country in recent memory during COVID. It's now like 1 3/4. The long bond in China, as we go distant paper on this, a 30-year China sovereign is now equivalent to a Japanese interest rate. It's 2 1/4 out there. And so you have this situation where we're all focused on, by nature of, we're living in North America, we're focusing on Trump, we're focusing on Jay Powell, what are they doing in Ottawa, all this stuff. The reality is you did have that stimulus package out of China, which was announced on Friday. It's a little bit of a yawner and a little bit of a disappointment because they thought we're going to get more of a fiscal bazooka out of the Chinese. But the bond market's given us maybe a 225 basis point gift to the downside. That alleviates costs of capital. It starts to get you maybe scratching your head a little bit on regional equities over there.
Just finally, financials. You are focused on that area. Do you see further gains for the U.S. lenders?
Yeah, well, and I worry, Andy, am I in the consensus? I like to fancy myself a contrarian every once in a while. Everybody's bulled up on this M&A theme. In fact, do you have anybody coming on the show saying we're not going to have the M&A theme? I do think it's real. We already got that big pop in reaction to the Trump win. It's going to be a critical question figuring out the direction of the banks, because that is the big group in value indexes. Of course, Wisdom Tree's playing big in value, but we also might be able to get something like a mid cap value or a small cap value, because the regional banks seem to be game on. Don't fight the tape. The tape likes regional banks, and it likes the big money center banks too. That seems to be commonsensical on. We'll see. Sometimes common sense doesn't work out in markets.
Jeff, thank you very much indeed. Great hearing from you. Jeff Weniger, a great original head of